Hello, welcome back to Work Business Consultant. Today we have brought you another financial model. As you can see, uh, this model is about the bookkeeping agency. It's a financial model template. The peach cells will indicate the input cells, whereas the gray cells will be the formula cells, and the light gray cells would be helping cells. As you can see, the input cells over here, the input includes the starting input funding assumptions, and the revenue and cost assumptions, as well as customer marketing budget assumptions, and uh, OPEX and CAPEX assumptions, and working capital. As you can see over here, these speed cells are changeable, so you can change them as accordingly. Um, for example, if we change this percentage from or this average hour from 10 to 15, it will have an impact in the revenue analysis. As you can see, the revenue analysis tells you about the new customer acquired and the total number of customers on each revenue stream, and the revenue generated from them, as well as the cost of service. Then comes the marketing budget. The marketing budget tells you about the new customers acquired through the marketing expenses. It tells you about the total expenses on each of the category. For example, Facebook ads, Instagram ads, Google ads, and YouTube ads. Then comes the startup summary. The startup summary tells you about the total uh, fundings and total expenses for the first year of the company, as well as the uh, assets and liabilities and capital of the company for the first year, also the additional funding that will be required in the first year. Then comes the financial statements, which includes the income statement, which gives you the net income generated by the company in the 5 years, which is based on yearly and monthly basis. As you can see over here, these are all monthly basis going towards 60 months, that is 5 years. Then comes the cash flow. The cash flow statement gives you the cash flows cash flows of the company from its operations, investments, and financings. It gives you the total net cash of the company at the end of each year. Then comes the balance sheet. The balance sheet gives you the total assets and the total liability and capital and their difference, uh, and gives you overall the difference about it. The balance sheet shows being equal shows that all the assumptions and all the values are accurately put together. Coming towards the financial analysis, the financial analysis sheet includes the break-even analysis, which tells you about the break-even sales, whereas the company, it also gives you a company valuation, which tells you about the WACC of the company, as well as the expected equity offered to the investors that you can see over here. Then comes the company valuation at the year zero, and afterwards it comes the sensitivity analysis, which gives you the actual scenario-based assumptions of the company, analysis of the company on optimistic, actual, and pessimistic. It also gives you a brief on the payback period of the company, the IRR of the company, and the NPV of the company. Then comes the KPIs and ratios of the company. This tells you about profitability ratios, liquidity ratios, solvency ratio, and efficiency ratios. Coming towards the CAC and CLV analysis, this gives you the customer acquisition cost as well as the customer lifetime value of the company. Then comes the working sheet. The working sheet includes the employee payroll as well as the operating expenses, lease schedule, or you can say loan schedule, and working capital. Then comes the dashboard, which tells you about the KPIs of the company as well as all the information in the graphical form. That's it. This is the end of the video. Thank you for watching. Do like and subscribe us.